Hey everyone, Verizon reported fiscal 2023 second quarter earnings results, and in this video, I'm going to review its financial figures. I'm also going to update my recommendation of Verizon stock. Heading into these earnings, I had Verizon stock rated as being on the borderline of a hold and a buy. You're going to want to stay tuned to see if I'm upgrading or downgrading or keeping the stock rated as the same. So let's get right into it. Total revenue of 32.6 billion was down 3.5% year over year. Adjusted earnings per share of $1.21 decreased by 7.6% from the same quarter the prior year. Verizon's biggest threat right now is from T-Mobile, that's offering new customers better prices, better promotions, so it's having better success in adding new customers, and that was evidenced by Verizon that only added 8,000 postpaid subscribers. Now it has 143.2 million subscribers right now, but it's just having a hard time getting new subscribers because for a new customer, when you're comparing between Verizon, AT&T, and T-Mobile, T-Mobile right now has the best prices and best promotions. So if they've got good coverage in your area, you're probably picking T-Mobile. Now, that doesn't mean people are switching from Verizon to T-Mobile, right? Wireless phone churn rate, which means the number of people that are canceling their wireless subscriptions on Verizon, was just 0.83%. So less than 1 out of 100 people are canceling Verizon to go to T-Mobile, which makes sense, right? Now, if you're a new customer and you're trying to pick between the three providers, if one of them offers you $5 or $10 per month better price, you're going to go with the one that offers you that better price, $5 or $10 per month, whatever it might be. But if you're going to switch from Verizon to T-Mobile, $5 per month is probably not enough to make you switch because there's a lot of time commitment associated with switching your account from one phone company to another. So although T-Mobile is offering and attracting newer customers, it's not doing enough to steal customers from Verizon. That isn't to say that T-Mobile won't try to do that by offering even lower prices. T-Mobile is really disrupting the industry. AT&T and Verizon were kind of playing nice with each other, not competing fiercely on cutting prices to steal customers. T-Mobile is not playing nice at all, and it's causing a disruption to the industry, which is threatening Verizon and AT&T. Cash flow from operations increased to 18 billion. That was up from 17.7 billion in the same quarter in the prior year. This is a very lucrative business model. It takes a lot of capital investment up front to establish the service offering, but once you've got it and you've got these customers, 143 million wireless postpaid customers, it's a very lucrative business model generating 18 billion in cash flow in one quarter alone. I was glad to see Verizon pay down some of its debt. It had a massive $140.7 billion debt load. It reduced it to 137.9 billion. So it spent a couple of $1 billion paying down its debt, which I was glad to see. This is a massive debt load. And just in the most recent quarter, Verizon paid $1.285 billion in interest expense. So if you annualize that, Verizon is paying over $5 billion in interest expense on this long term debt. $5 billion in interest expenses. You thought your credit card interest expense was high. Look at what Verizon is paying for interest expenses. Very, very high. I would like to see them continue using their cash flow to pay down this debt, especially because interest rates are rising. I wouldn't mind if it cut its dividend or paused its dividend for a couple of quarters to use that cash to pay down its dividend instead. However, some investors might be upset with that move. I wouldn't be one of them. Now, to update my recommendation of Verizon stock, I am keeping it the same on the borderline of a hold and a buy. Although I do like the progress the company made this quarter in paying down the debt, I'm concerned about falling revenue, falling profits, and very meager new wireless postpaid subscriber growth, and I'm concerned about the competitive pressure that T-Mobile is putting on the industry. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.